Hello, everybody. My name is Alesh Eisner, and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is my thoughts on market happenings for the week ending December 9th, 2022. Looking at the market indexes for the week, the TSX, S&P 500, Dow Jones, NASDAQ, and Russell 2000 were all down for the week, as was oil. Gold was the only positive for the week. Looking at Canada, the Bank of Canada on Wednesday increased its target for the overnight rate by 0.5% to 4.25% as expected. The TSX seemed to take it in stride because the comments following the hike were dovish, meaning they may slow or stop raising rates. They could have raised only 0.25% this time, in fact. The experts are expecting a weakening of the Canadian dollar, somewhat counter to the high raise. A 0.25% rate hike is expected for the January Bank of Canada meeting. Equifax Canada is seeing total consumer debt climbing to 2.36 trillion as consumers lean on credit cards, with credit card spending increasing 17% year over year. Canadians are relying on credit cards as they emerge from the pandemic and face tough economic times. The unfortunate statistic has been that consumer proposals by seniors have been increasing as well, showing that the post-pandemic times have been tough on those with fixed income. Toronto real estate prices fell for the 8th straight month in November. Month over month, the benchmark fell only 1% as the decreases are starting to slow. The higher interest rate is causing the higher borrowing costs. The market is also illiquid, with listings down 49% year over year as supply of houses falls. If the jobs market gets worse, that could cause another leg down for Canadian real estate. The prices are down about 20% from the highest highs. TC Energy had a pipeline leak this week in the Keystone Pipeline, which didn't do anything to the share price, and it's expected to be fixed reasonably quickly. TC Energy has estimated the volume of oil released in Wednesday's Keystone Pipeline leak at 14,000 barrels, making this most recent spill larger than Keystone's 2017 and 2019 leaks combined. The extent of the damage to the pipe and its estimated restart date remain unknown. However, analysts say Canadian crude could suffer a significant price impact if the pipeline is shut down for more than a few days. The TSX price to earnings ratio is around 12, while the S&P 500 is closer to 17, and the TSX is below its average while the S&P 500 is above its average, making a case that the TSX is cheaper and will outperform the US in the coming year. Turning to the US is sending liquefied natural gas to Europe to avert a potential energy crisis due to Russia's sanctions on Europe and selling natural gas to Europe. Ford says that it now has a 7.4% of the EV market in the US, which is up from 5.7% in November of last year. Tesla controls about 65% of the EV market. This, however, has been shrinking. Ford's crosstown rival, General Motors, has set the ambitious goal to be number one by the middle of the decade. Ford got ahead of GM because it retrofitted its existing vehicles with electric drives, while GM designed its EVs from the ground up, taking longer but arguably producing a better vehicle. The onshoring of microchip production is led by Taiwan Semiconductors, investing $40 billion in Arizona for 2 microchip plants. And finally, the weekly U.S. jobless claims increase to 230,000, in line with expectations. Now some bits and pieces from the rest of the world. There are signs that the Chinese zero COVID policy and lockdowns are beginning to ease. However, after people across China took to the streets in recent weeks to protest the policy in rare showing of unified resistance, Beijing and Shenzhen said over the weekend that they would relax a rule that required negative COVID tests before travel, and later in the week, they relaxed rules on travel within China. In China, there's been speculation that leaders were preparing to examine ways to relax their notoriously stringent COVID policies. The renewed surge in infections made such a relaxation in the near future unlikely. What's more, the recent protests that have caught some party leaders off guard may sour some on the notion of altering course, as it could be seen as giving in to popular demand in a country notorious for its, quote, party knows best stance. Any further lockdowns in the world's factory during the critical holiday shopping season will only add to worries of a hard landing for markets. The government will attempt to vaccinate and boost people by January, but with Chinese vaccines, which are not known to be very effective, and so the reopening will slow and be cautious over the next several months. OPEC said it will stick to its production cuts, and the sanctions price cap on Russian oil at $60 per barrel took effect this week, even though it is hard to say what effect on Russian production this will actually have. Experts think that the $60 price cap is toothless. And Canadian food costs are expected to rise about 6% in 2023, said Canada Food Price Report. This is lower than what has been happening in 2022, which anybody who's been to a grocery store is well aware of. Finally, looking at next week, there's a few companies still reporting Q3 results. On Monday, we have Oracle. On Wednesday, we have Lennar, which will give us a suggestion on what is happening in the US real estate market. On Thursday is Adobe, and on Friday is the Accenture consulting company. Economic events next week. On Tuesday is the US Consumer Price Index report, just a day prior to their interest rate decision, which is happening on Wednesday. This is the most eagerly awaited Fed interest rate decision in months. A 0.5% rate hike is expected to a 4.5%. The Fed is now expected to start easing off its aggressive 0.75% pace. Yet, as recent economic data has shown, inflation is still high, albeit on the cooler side, and the job market is still rocking. The Fed hasn't cooled the economy as much as it would have liked to by now. Quote, despite some promising developments, we have a long way to go in restoring price stability, end quote, Fed Chairman Jerome Powell said last week. And on Thursday is US retail sales and manufacturing data. That concludes my thoughts for the week. If you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.